Hello there. Today we've got a really interesting question for you, a bit of a curveball question I'd never thought about before, and I was wondering, have I missed an opportunity when Claire asked me this question?
Yeah, so we're going to have a look into a question today about can you pay for a company car via an LLP, which is a limited liability partnership, completely tax-free. So we're going to have a little delve into that question. I'll explain where my thought process has come from, and then we'll talk through the pros and cons, both from a tax perspective and also maybe just the practicalities of doing this might be a bit
And can I tell you why it won't work?
Yeah, I know you're dying to tell me why it won't work, but the logic of this is that most of us know that if we have a company car through our business, so our limited company, and we use it for personal purposes, then actually it becomes what's known as a benefit in kind, and you end up paying tax on that car.
That's right, you do.
So,
which I always say to clients, why do you want to get a company car in your limited company, pay all that tax, pay the Class 1A national insurance? Not really a good idea in a limited company.
As a general rule, at the moment there's getting an electric car through like a salary sacrifice scheme in your limited company is usually the most tax efficient way to get an electric vehicle. But if you're not getting an electric vehicle, then actually it tends to work out more expensive, but it does completely depend on the make and model and the CO2 emissions of the vehicle that you're choosing. So you do have to do the calculations.
It just rolls off the tongue, doesn't it, Claire?
Yeah, exactly.
It just rolls off the tongue.
But what we're talking about here is an LLP, which is not a limited company. It's much more a bit like being a sole trader, but there's multiple people in there, isn't there?
There always has to be two people. That's why it's called
minimum
a
of two.
Yeah, exactly. But can you put a limit? Can you put a company car through there? Well,
the thing with LLPs, and the reason why this is quite interesting, is that benefits in kind only apply to employees, and when you are in an LLP, so we could enter into an LLP called Ask the Accountants, and what we're essentially saying is that we are two sole traders, but we're working together in partnership, and we are partners of our LLP. And a little bit like a limited company, you're entitled to a share of the profits, etc., etc. But the thing with an LLP is that you're a partner, not an employee.
Yeah.
And benefits in kind can only apply to employees.
That's right.
So it means that if an LLP provides, say, Ask the Accountant provided each of us with a car, there's no benefit in kind to pay because we're not employees.
That's right. But the car would then be treated as a capital allowance when we bought it. Now, you were asking me this question because we were talking about more upmarket cars. I think we were talking about Porsches and things like that, weren't we?
And expensive,
Yeah, expensive cars. And there's two things I want to talk about. A, first of all, we're going to set up an LLP. What's going to be the income, because we need an income source coming in there for it to generate. Okay.
So that's the first thing, isn't it? For it to be a legitimate business and be deemed an LLP, it's actually got to be a business. It's got to do some sort of trade. But I think it's fair to say that we could maybe get a sponsor for Ask the Accountant. And all of a sudden we're a revenue generating business. So yeah, if anyone wants to sponsor our Lamborghinis, then do reach out.
That'd be nice, wouldn't it? But if we're having obviously we've bought the car in the LLP now, okay, we're going to put it in the capital allowances for tax purposes. I believe, because we're talking about these Lamborghinis, that we're going to have capital gains allowances of 6% under the special rate rules, okay? So they are going to be quite insignificant if we're looking at a car of £100,000 maybe, and you're getting 6% writing down allowance on that each year, okay? And then we have to think about, is there any personal use element in that, using that vehicle? Or is it 100% business, or is it 100% personal, or is it 50% either way, or whatever fraction we're going to use? So then you see that the 6% can get reduced quite quickly. So say we've got a capital allowance write down of £3,000, and 50-50 business, 50% is personal, then we're claiming £1,500 capital allowances.
Okay, so specifically what we're talking about here is when you buy the car through the company, you can't claim the cost of the car. No. You claim essentially depreciation. So you're allowed to write off 6% of the car every year.
But depreciation and capital allowances are different. You have to remember that as well.
Yeah, but for we've got to use terminology that people would be familiar with. So we can call it depreciation, but technically there is a difference. But so you can write off 6% of the cost of the car every year and as an expense in your business. So say we had £10,000 of income from our nice new sponsor and ask the accountants, we can write off 6% of our car and deduct that before calculating the taxable profit.
Yeah.
And what you're saying is that 6%, actually, you work out what that 6% is, but then you have to apply a personal and business use split. So if you're only using if there's no use at all for business purposes, you can't deduct any costs.
That's right.
However, that's why buying a car in an LLP wouldn't work. What about leasing a car?
Well, with leasing the car, you can set all the expenses against it.
Exactly.
Yeah.
So all of a sudden, we just need to get a couple of sponsors for Ask the Accountants, and we can have whatever fancy car we like. It's completely tax deductible. We're going to make it so that our LLP doesn't make any profit, because our income is going to be roughly the cost of the car. We only want to generate enough money in our LLP to cover the bills for the car and then our year-end accountancy bill, because we've now got to do a partnership return. So actually, theoretically, yes, you could lease a car. You can't buy a car because we've discussed that doesn't work, but you could lease a car through an LLP. And if you can roughly make the cost of your lease equal the cost of your income into the LLP, then there'd be no tax bill for the LLP and no tax bill for you personally related to the car.
But I think, you raised a good point there about you're going to have to do some accounts and some tax returns for that. And for the average person, is that going to actually be cost effective at that point?
But I think if you think about maybe the audience that is probably going to watch this and think, should I set up an LLP to buy my Lamborghini? They're probably going to be earning maybe multiple six figures a year. So 750 quid for a partnership return, they could probably afford that, can't they?
They probably could. Probably could. But I think it's worth considering that it is an extra expense to do that. And I wouldn't say I've come across this idea ever.
Wow. I've read about this in a few books before, and there's a few people that speak about it on like YouTube videos and things like that. And do you know what? Even my husband said to me the other week, why are we buying our own cars and claiming mileage, which I think most people do in their limited companies? Why don't we set up an LLP? And the reason why was because we were talking about our podcast and we were like, oh, we could actually set the podcast up as a separate LLP. And I think you do have to be careful about like avoiding tax here. HMRC are not stupid, and I think it's also worth pointing out that I think every single statement that HMRC have made about tax avoidance and anti-tax schemes and things like that, this has been mentioned since 2011, and I am flabbergasted that no chancellor has actually wiped this out of legislation. And that is something you've got to consider, is whenever you do these weird and wonderful things that don't quite seem to make sense and you think that could be too good to be true, it might be legal right now, but the next budget it could be a different kettle of fish.
I think that's just the world of tax though, isn't it? It's always the next budget that we're looking for to see what's going to happen and see what will change. But I think that's a really interesting question. I would say personally, as I probably always say, Claire, it's worth thinking about, and every case is different. If you want to run the numbers, I'm quite happy to run the numbers for you and see if it's going to work. But I imagine most people won't do it.
I'm doing it. I am setting up an LLP for my podcast, get a little bit of income into it, set it up as like a little management company for podcasts, and we're going to be getting our cars through an LLP.
But you can do the accounts, can't you, Claire?
Well, that is very true. But it's about £500 to £1,000 a year. Really the amount of money that you're going to save. I'm not talking about if you're driving around in a Volkswagen Golf or something. It's probably not worth doing it if you're doing that. But if you're in that luxury end of cars and you're shopping in Jaguar, Mercedes, BMWs, Porsches, that type of thing.
Well, I'd be interested to know if anyone does it. That's what I'd like to know, and how they got on, and how they found the process, why they thought it, and what their accountants actually said as well. Because we've looked to opinions. There are thousands of accountants out there, and I expect they've all got opinion on it as well, which is probably very different from ours as well. Very true. You might even find someone who agrees with you, Claire. Well, yeah, that's my take on, can you pay for a car completely tax-free? I think yes. I think no. Oh.